we can use them to make our reserves go a longer way. The second initiative that is very, very powerfully being implemented by China in the region, known as the Chiang Mai Initiative, is a series of, so China has signed up with 14 countries, Pakistan is not one of them, but the idea is to swap currencies to stimulate inter-country trade. So China will make, for example, as it has done, $20 billion available to South Korea. South Korea will make one available, corresponding one available to China. And those funds are then available for local businessmen to buy from the respective countries. Now, we would like to see a role for Pakistan in a similar arrangement. And of course, it lies in the future, but this is another excellent form of making existing funds go a longer way, or leaving your reserves free while you can still carry on trade, or in fact build up trade. Lastly, and perhaps most relevantly to this forum today, we look forward to the rapid revival and expansion of the fund management industry. As I said, Pakistan has no financial leverage, and I pointed out that this is primarily because of the virtual absence of a domestic public debt market. And that's the reason why bank spreads are as high as they are, because bank spreads don't have to compete with public markets. There's also a lot of inefficiency in how government debt is priced because of lack of liquidity, lack of transparency, lack of regular quotation mechanisms. Now, these are all things that we as the State Bank are working on, but creating a broad and deep market for government debt outside banks and insurance companies is critical for two reasons. I pointed out the savings investment gap, to fill part of that, and also to prevent future crowding out, a future clash between government requirements from banks and the private sector's requirements from banks. That's not an issue today given the huge liquidity available with banks, but then we have to create these markets so that in the future both have access to capital freely without the crowding out effect. As I mentioned, some of you may have attended a meeting the State Bank held about 10 days ago, which aims at connecting primary dealers, banks dealing with securities, the stock exchange, the National Clearing Union, onto a single platform so that all transactions are recorded, quoted by issue, so that looking at the screen, you'll see how many times that particular issue is traded, and then you may not get a firm price, but the primary dealer will stand behind that to make a price. So we could have this in place in the matter of a few months, and it's the beginning, it's the first step of the kind of A, liquidity, B, yield curve that you need to develop a corporate debt market in due course. We believe a smooth, facilitative trading platform will encourage corporates and high net worth individuals to come forward as investors in the government bills and bond market, and we expect funds to take an active role in this sector and thereby bring retail investors into the market. Given the high current interest differential that the rupee carries over most other currencies, this paper should also be attractive to Pakistanis abroad and to other investors, and we would hope that that is something you could assist in the marketing of, in drawing attention to the great opportunity. These days, portfolios are really missing the high yield piece without undue high risk, and Pakistan, I think, is a very good example of high yield, and I would say stable risk. I know the political risk in the eyes of foreign investors overshadows everything else, but as you'll see while you're here from talking to businessmen, it is a really greatly exaggerated perception in terms of how the economy continues from day to day. It is not. It does affect us because foreign investors are shy. It affects us because portfolio flows have gone negative for the last few months. So, but for domestic business, it's really relatively minor in terms of plans and implementation of those plans. Now, with, I think, public debt markets functional, we would also look forward to your enterprise, your cumulative institutional enterprise, from activating our equity markets. Our equity markets had excellent infrastructure and excellent research, but they turned into trading markets. Those markets were not used for raising capital. Critically, this is the second piece that we have to build up, not trading values, but the importance of the equity market as a source of capital. If debt markets and equity markets begin getting greater and greater shares of GDP compared to the past, then you are going to see banks' balance sheets cleared of a lot of top corporate and government paper that sits on them. And this clears the way for the banks to enter the SME business and agribusiness in a more aggressive way, which is really the basis for Pakistan's future growth. If you're looking out 3-4 years, it's going to come from the top end of the SME, and they have to be taken forward in a structured way. In sum, although these are challenging times, times such as this force a country to review its domestic options with a new focus and take the steps necessary to build domestic products in markets in both financial services and in also what I haven't talked about in our manufacturing industry, which needs reform and restructuring just as much, if not more, than restructuring and reform in our financial markets. Your industry, of course, will be depended upon to help us move forward in this direction. And lastly, there's just one, it's not advice, it's a suggestion or it's a plea. Let's look for value creation before value extraction. As we go forward in terms of building our investment products and as we develop our investment strategies as fund managers, as investment banks, as brokers, let's tell ourselves that there is no point in looking for early value extraction. This market needs depth, it needs liquidity, it needs to become attractive to issuers, and that as a community we will try and build solid pillars and solid depth in our financial markets. Of course, value extraction will come, and the better we do the first part of the job, the more value there will be to be extracted. But let's now take an investment view for a few years rather than a trading view. And one thing I do assure you absolutely about: the central bank's role is not growth. The central bank's role is price stability. But given the heavy weight of the banking system, the central bank is involved with growth. And in as far as developing financial markets are concerned, every facilitation that is viable and where the central bank has a role, we would be very eagerly, very positively able to listen to you and be extremely keen to help. Thank you very much.
Thank you, Governor Saab. We will continue the proceedings with Mr. Osaf Abbas from Morgan Stanley, Managing Director. Osaf.
Thank you very much, and honoured guests, ladies and gentlemen, good afternoon to all of you. It's a great pleasure to be here, as Mudassir said, on and off for the last 21 years with 2 different US investment banks. I've been calling in Pakistan, and it's great representing Morgan Stanley to be here for our inaugural trip. I'm particularly grateful to Farooq and Mudassir because Morgan Stanley has been working with BMA on a couple of projects, and we hope that in the next few months, inshallah, that those projects will reach fruition and we'll be able to show you some of the investments